Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look and take a look at the New Zealand versus US dollar. It's an interest rate decision week this week in New Zealand. The central bank is expected to keep rates unchanged, although the tightening bias is likely to remain. So let's talk about the tacticals that are driving this currency pair and see what levels are at risk, what the bias is, and what the targets are. So let's get started. I'm looking at the 4-hour chart, and if you take a look at the move down from the high price that we saw in the month of December to the low price that we saw in the month of February, the 38.2% retracement was broken in last week's trading. The market moved above that level. We did correct out back down below it here, but then found support buyers for the most part near that 38.2 at 0.61637, including today, where the price went down a few pips below the level at the start, and then a few hours a few bars into that, and then more recently into the North American session, we did find support buyers right at that level at 0.61637. That keeps the buyers a little bit more satisfied. I like to see the price get and stay above 38.2% retracement after a trend-like move, and this is a trend move to the downside. We did move above it, and we're trying to stay above it now. So that's the trade here. As long as the price remains above the 38.2% retracement, give or take, we might use this swing area as the risk-defining level between 0.6148 and 0.6159. Then give the benefit of the doubt to the upside and have traders think going of a return back toward the highs and perhaps even further above that level. As mentioned, the Reserve Bank of New Zealand is expected to meet, or are going to meet on Wednesday, or announce their interest decision on Wednesday morning with the expectations of no change, but the expectations is that they maintain a more hawkish stance as inflation remains still pesky, and they want to move rates out back toward the 1 to 3% target for that for the inflation target. So will that lead to a rotation back to the upside? We will see, of course, but what we do know is that the risk is defined against the 38.2% retracement and maybe against this whole high at 0.6159 all the way down to 0.6148. If it stays above those levels, then we'll give the benefit of the doubt to the upside with the 50% retracement and this swing area up here as an next target between 0.6218 and 0.6228, and then above that 0.6241, the 61.8% retracement of, again, this move down from this high down to the low price right here. That's my look at the New Zealand versus US dollar from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye.